Ask any veteran investor about their start, and they will tell you the same thing. Securing your first $100,000 is an agonizingly slow start. It is a notoriously difficult phase, but it remains an essential financial milestone. Most beginners will fail within the first 3 years. They chase speculative crypto distractions or panic and sell when the market eventually dips, and their momentum stalls out before it can ever truly begin. This chart shows the specific threshold where the math shifts. Right around $100,000, the interest curve crosses your contribution line. At this point, your money is generating as much growth as your physical labor. Reaching this intersection is the result of a precise mathematical blueprint, a strict 10-year plan that removes luck from the equation entirely. Before investing a single dollar, you have to stop any financial bleeding. High-interest credit card debt, anything with a rate above 7%, will mathematically wipe out your stock market gains. You must pay it off completely first. You also need a non-negotiable cash cushion. Store 3 to 6 months of living expenses in a high-yield savings account. This ensures that when life gets expensive, you aren't forced to liquidate your investments at a loss. Once the foundation is set, we can map out the timeline. According to formulas utilized by the SEC, hitting the $100,000 target in exactly 120 months depends on 3 variables: time, your contribution, and your rate of return. This chart shows the monthly contributions required. At a conservative 4% return, you save $680 a month. At an aggressive 10%, it drops to $490. Look closely at the first 5 years. The 4 and 10% growth lines are practically touching. In this early phase, your specific rate of return matters far less than the absolute dollar amount you are saving. The first half of the decade is about brute force saving. You are building the mass required for compounding to take over the heavy lifting in the second half. To build this wealth steadily, most investors use broad, low-cost index funds like the S&P 500. These funds allow you to own a piece of the entire market without the risk of picking individual stocks. In the US, you maximize these returns by following a specific tax sequence. First, secure your employer's 401k match, then max out a Roth IRA. Comparing these two accounts reveals the impact of expense ratios. A passive index fund costs about 0.05%, while an actively managed fund often charges 1%. Over several decades, that 1% fee will extract tens of thousands of dollars from your final balance. Minimizing internal fees and taxes is the most reliable way to maximize the mathematical leverage of your monthly contributions. Survival over 10 years requires strict automation. Set up dollar cost averaging so that your investment is pulled directly from your paycheck. This bypasses human willpower entirely. The biggest threat to your timeline isn't the economy, it's your own reaction to it. Major market downturns trigger a panic that causes most investors to sell at the bottom. This chart tracking the March 2020 crash shows why automation is key. While the market dropped sharply, those who continued to automatically invest bought shares at a discount and captured the rapid recovery that followed. System automation creates a psychological firewall, transforming market crashes into routine purchasing opportunities. At the end of 120 months, you have reached the $100,000 threshold. Look at how the timeline compresses. While the first $100,000 took 10 years, reaching the next $100,000 will likely take only 4 to 5 years. The compounding timeline accelerates with every milestone. If you project this same behavior out to year 30, the growth curve becomes nearly vertical. With consistent contributions and 7% returns, the balance crosses $1.3 million. This foundational security allows you to shift your focus. Instead of worrying about basic survival, you can begin actively designing a rich life, designing your lifestyle based on what brings you fulfillment rather than just what you can afford. The first $100,000 is more than just a number. It buys the permanent discipline and the financial security required to truly own your time.